The stock market. For some, it's a mystery. For others, it's a wealth-building machine. But how does it actually work? How can you invest, grow your wealth, and even create a passive income that lasts a lifetime? If you've ever wondered how to get started with investing and unlock the power of the stock market, you're in the right place. In this video, we'll break it all down and show you how to use the 4% rule to achieve financial freedom. Don't forget to like, subscribe, and watch until the end. This could be life-changing. What is the stock market? 1. Definition. The stock market is where people buy and sell shares of companies. Owning a share means owning a small piece of the company. 2. Why does it exist? Companies raise capital for growth. Now, investors make money through stock price increases or dividends. Example, you buy a share of Tesla for $100. If its value rises to $200, you've doubled your investment. How does the stock market work? 1. Key players. Stock exchanges. Platforms like the NYSE, NASDAQ, or the London Stock Exchange. Brokers. Middlemen who facilitate buying and selling. And investors, individuals or institutions trading stocks. 2. The process. Companies issue shares in the primary market, and investors trade these shares in the secondary market. Prices are determined by supply and demand. Tip. Stock prices can change rapidly based on news, market sentiment, and economic factors. The 4% rule. The secret to infinite income. 1. What is the 4% rule? And it's a guideline suggesting you can withdraw 4% of your investment portfolio annually without running out of money. An example, with a portfolio of $1 million, you can withdraw $40,000 every year, and your portfolio should still grow. 2. Why does it work? Yet historical stock market returns average 7 to 10% per year. And by withdrawing only 4%, your investments continue to grow, creating infinite income. Fun fact. Investing in index funds, such as the S&P 500, is one of the easiest ways to achieve this. How to start investing. 1 step by step. 1. Open a brokerage account. Choose platforms like Robinhood, Fidelity, or Vanguard. 2. Set your goals. Are you investing for retirement, a house, or financial freedom? 3. Choose a strategy. Passive investing, buy and hold index funds. And active investing, pick individual stocks and trade regularly. 2. Why start now? The power of compound interest means the earlier you start, the more you earn over time. Example, investing $500 monthly for 20 years at 8% returns results in over $300,000. What affects stock prices? 1 factors. Company performance, earnings reports, new products, economic events, interest rates, inflation, and market sentiment, investor fear or optimism. 2. Example, a company announces record profits, stock price rises. As negative news or missed targets, stock price falls. Tip. Diversifying your portfolio helps mitigate risks from price fluctuations. Common mistakes beginners make. 1. Mistake number 1, emotional decision-making. Panic selling during downturns or buying during hype cycles. 2. Mistake number 2, lack of diversification. Putting all your money in one stock is risky. 3. Mistake number 3, short-term focus. Investing is a marathon, not a sprint. Advice. Stick to your plan and avoid letting emotions guide your trades. Major stock exchanges around the world. 1. Top players, NYSE, the largest stock exchange globally. NASDAQ, focused on tech companies like Apple and Google. LSE, a hub for European companies. Interesting fact. Companies like Apple and Amazon are worth more than the GDP of many countries. The future of the stock market. 1. Tech dominance. AI, renewable energy, and electric vehicles lead the charge. ESG investments. Companies focusing on sustainability and social responsibility are growing in popularity. 3. Digital assets. While not stocks, cryptocurrencies are reshaping how people think about investing. The stock market isn't just for the wealthy. It's a tool anyone can use to build a secure financial future. With the 4% rule and a solid investment strategy, you can create wealth that lasts a lifetime. If you found this video helpful, give it a like, subscribe, and share it with your friends. Are you ready to start your investment journey? Let us know in the comments below.